residency programs are different lengths. Sometimes there's 3 years, sometimes there's 6 years, and we're in between. And for some people, it may feel like a short time. Can you comment, like, is it worth buying a house if I'm only going to be 4 year in a 4-year program in a location and I plan to locate somewhere else after?
I think so. I think it depends on the area, obviously, and kind of what you can afford, obviously. But if you are able to get into a situation where, you can use Bob's money rather than your own to buy the place, I think that's always a smart move, right? So, for example, I remember when we moved to Vancouver. At that point, if we had bought a place there, what was it, like 7 or 8 years ago? If we had bought a place there, could you imagine what it would be worth now if we were able to hold on to that? And if we could do that with nothing out of pocket, then I think it's a no-brainer. If you can make the payments, then I think it makes sense.
Yeah, thank you for reflecting on our missed
Yeah,
opportunities.
there's lots of them. So I'm trying to help
uh,
others avoid these situations.
Awesome. But I know a lot of my colleagues still say, like, oh, it sounds really daunting to buy a house, and right, especially if you haven't been in that city or haven't lived there. But if they don't know anybody and don't have boots on the ground, can they ask you for rental properties or, for other
Absolutely. Yeah.
ways?
Yeah,
Mhm.
I can help with, if you're looking to rent for the first year or two, even, I can help with that. And then, when the time is right to buy a place, I can, help you through that process as well. So, uh,
Mhm.
yeah, definitely.
And can you, like, in what if after 2 years you still have your contact, but I'm moving out of states, or or I don't know anybody else, I just came across you, and can you help people who are not necessarily moving to California to find a home?
Absolutely. Yeah, I've actually done quite a few deals over the last little while out of state. So I'll refer to a trusted partner that I have. And I've been very diligent and, like you, I go to conferences all the time and I'm always interacting with other people from different areas. And, this is a very unique situation. Even in my own office, I talk to people about physician loans, and a lot of them have no clue what I'm talking about. So what I typically do is I partner with people that do have experience in that area in a different state or different city. So yeah, anywhere basically in the US and even in Canada, I have contacts. So I can definitely help you find somewhere, even if it's not in Los Angeles.
Sounds good. And Bob, I think I had heard you say that there may be ways to not pay mortgage insurance on physician loans. Can you just talk about that? Because I don't think everybody knows about mortgage insurance and what that means and when do you have to pay for that.
Sure, sure. So mortgage insurance is basically what lenders are going to put on a loan for people that are not putting down 20%. Because if someone puts down 20%, they think, okay, this person is going to dump a lot of equity into the home right away, right? They're not going to be at risk because if for whatever reason they decide they don't like the area, they want to be in a different school district, well, we're going to move. And I'm not even worried about selling that home. If they have no equity in the home, then, or 5% down, it's a bigger risk factor, right? For whatever reason. So there's private mortgage insurance companies out there. There's a few of them that when you just get a standard mortgage, if you're putting down 5%, this is another benefit of being a doctor is, let's say you're a teacher. Teachers very high in demand, respect that profession. My wife's a teacher, or she used to be. But they don't get the no PMI option. So it's private mortgage insurance. And basically that just is an extra payment on top of what you pay as your regular mortgage payment. So if you want to keep your payment down and also help qualify, but just not throw money out the window, because that's not money that's paying down the balance of your loan. It's just an extra payment. So the doctor loan has zero mortgage insurance because it is a portfolio loan that we hold on to. Technically, we have to say that we, may sell off people's loans to another servicer, but I've been here 20 years. Every single one of my clients that comes back to me to refi, their loan is still with our bank. So it's in-house mortgages. We have different rules than just the standard rules out there. And so we don't have to have mortgage insurance, which is a huge perk when putting out less than 20%.
The other thing with that too is I feel most people don't realize mortgage insurance that they're paying every month, it's not benefiting them at all. It's solely benefiting the lender. So if you don't have to put more money in the lender's pocket, then it's definitely a better situation for sure.
And Bob, again, would you talk, because obviously rates are high right now, and so it feels really daunting. Are there options, like, am I locked in with a rate when I get my mortgage?
Right. So when you look at the history of mortgage rates, you can go back to like the 70s, right? That's, you're talking about 50 plus years. You'll see rates were in the teens, right? So now they're not really as high as people would think over the history, but they're definitely higher than they were the last few years, which does impact people for sure with what they can qualify for. But you basically are going to be on a 30-year note with us, if that's how you want to look at it, 30-year term, a 30-year fixed. You could do something that is going to get you a lower rate, like a 7-year ARM. That rate would be fixed for 7 years, but the rate's lower than a 30-year fixed. So over that period, if you want to save more money, most people think, hey, look, I'm going to have an opportunity to refi. So when you ask Dr. Chavin, are you locked into the loan? There is 0 prepayment penalty on our loan. So what I tell people, look, I'm going to lay out multiple options for you to look at. I'm not going to push you into this program over another. If you want the rate fixed for 7 years or 5 years or 10 years, we can look at different options, because you might only be in this house for 4 or 5 years. But regardless of which loan you look at, you can refinance at any time. So I'd say use this loan right now in this rate environment is a temporary Band-Aid. You're in the healthcare profession, right? It's a Band-Aid. It's just you're going to rip it off later. And so don't fall in love with this rate and say, hey, I'm only worried about the rate. You're going to love the home you live in, and just use the rate as a temporary tool. And then you can refinance later.
You can't renegotiate your purchase price, but you can always renegotiate the rate that you bought at. So.
That's true.
Awesome. And I guess to ask both of you, do you have any tips for those residents who are maybe looking to buy? Like, what would be their first step of approach if they're considering, maybe I want to buy, or I want to investigate whether I'm ready to buy? What's the first thing they should look into?
Do you want me to take that one, David, or do you want to take it
Yeah,
first?
you can go for it. Yeah.
So what I would say is, before you go fall in love with the home, okay, you may want David to go look at homes for you and find the right home. I want to be close to the hospital, or close to that cafe, or, I want to be walking distance to the restaurants and shops, whatever it is. Before you go fall in love with that house, get pre-approved, whether it's with me or another lender. I think we have a lot of benefits that we can help you out, but you don't want to go fall in love with the house and then go apply for the mortgage later and then find out, shoot, I don't qualify for that. So applying online is easy. I can walk you through it. I can answer questions. Anybody that's starting a new job, there's just different things you would do for applying, and we qualify you off of that new income. So get qualified first. And, if you just want to ask questions months before you even apply, I'm happy to give guidance on that too. Here are some steps that you should really do. Whatever you do, you want to do what is called opt out before you have someone pull your credit, because you are going to be very busy as a doctor. It's not us, but the credit bureaus are sharing information once credit is pulled with lenders that actually apply for their services to find, I need home buyer leads. I don't do that, right? So most of my business comes from other doctors that are referrals, or, people like David that have a doctor that wants special financing. So I work with those people. Okay. And so I'm not going to just start cold calling people that had their credit pulled. You will be surprised at how many calls you get. You may get like 24 calls in 20 minutes. It's not a joke. So I send my clients instructions on how to opt out. I'm going to send it to David too, so he can send that out to people too. That's something you want to do before your credit's pulled. But call me for advice first. I'm happy to walk you through it.
Perfect.
Awesome. And David, on your end, so after we get pre-approved, do we just give you a call, or what happens?
Yeah, absolutely. Give me a call, and we'll talk about kind of what you're looking for and see what's in the budget that you're trying to work within. Because I think once you kind of know what you're working with as far as budget and things like that, it makes it so much easier to make sure we're finding the right place. And if you can get in a place and hold on to it when you're done residency, it's a great way to build, your net worth and all that too. So, the place that we bought, it's jumped up quite a bit since we bought it. And, Bob was able to help us refinance at a lower rate. And, now basically we know that we can keep that place forever and it's always going to be an asset. So, it's going to continue to go up and, it won't be costing us anything. So I think the key is if you can get into the market, get into the market, and everything else it'll sort itself out. But yeah, the main thing is you're building equity, and then when you leave, residency or fellowship or whatnot, and maybe you're moving to a different city, you can keep that as an asset and continue to build your wealth with that.
Awesome. So thank you for all the very important and interesting information today. How do we get a hold of each of you? Bob, so what's your best contact?
So my best contact, Dr. Shabin, you can call, text, or email me anytime, but my cell phone's 404-432-1006. And that's with me 24/7. If you're on call, I'm on call. So I know you doctors are busy and you want to talk after hours. I do it. My kids say that's a goofy little phrase, but it's true. And I do the doctor loan in 22 states, a ton of business in California. But if you're moving somewhere else and you're going to another, program in residency, attending, whatever it is, happy to help you out. My cell phone, again, 404-432-1006. My email is bob.hall, bob.hall at truist.com, truist.com. So that's it. Thank you so much.
Thank you. And Dave, how do we get a hold of you?
Easiest way to get a hold of me is give me a call or shoot me a text, 323-919-0553. And I'm always quick to get back, or even Instagram at David Allen Cook, DavidAlanCooke. And yeah, I'm on there quite often. So definitely feel free to message me on there.
Awesome. Well, thank you both for your time, and I'm sure you will have helped a lot of new residents and new attendings, joining the healthcare workforce. So thank you so much.
Well, thank you. I enjoyed working with you all on yours and look forward to working with other doctors, and here to help anytime. So thank you so much. You all have a great day and keep in touch.
Thanks, Bob. See you soon.
Thank you.